Hello, welcome to week 137, 137 weeks in a row of reporting on the micro markets of Toronto that matter most to where our clients transact on the spring team, the urban markets straight through up until Pickering, Fort Union area, Leaside, Davisville, Yonge and Eglinton, Birchcliff, and Yonge, Lawrence, all the way up to the 401. Digging into these 5 communities for 137 weeks in a row. Thank you so much for watching. Please subscribe. This week, it seems as though the Toronto real estate market has entered the ice age. We have not seen this few sales, only 32 sales of houses in our urban markets this past week. That's like similar to what we see around Christmas time. Like a Christmas week is not a strong week of sales usually, and that's kind of our normal right now. So what does that mean to you out there? What does that mean to buyers? What does that mean to sellers? We can walk through the blog in a moment, but I just want to kind of talk about buyers for a little bit. If you're a buyer right now, like, are you a buyer? How do you feel being out there right now? We know that today properties are less expensive than they were in the wintertime. So, but interest rates are higher, so your cost to carry those properties is basically the same, if not more now than it was before. And if you've watched a couple of our previous videos, you would understand that right now is generally not a great time to be on the market if you're making a lateral move, or if you think that the market's crashing, you're going to sell your property, go into a rental. You're going to go from one really down market into a really hot rental market. I really think that anybody that has a property right now that is not wanting to move up, because as we've seen in previous videos, there is a tremendous opportunity for move up buyers right now to save multiple six figures in that transaction versus back this winter and in the upcoming hot market. Who knows when that will be, but of course it is coming inevitably. And if you're also somebody that believes that there is not a hot market coming, I'd like to know why. I'm not saying this is going to be tomorrow, but inevitably the Toronto real estate market is going to pick up again, and pick up to the point just like it has in the past when we've gone through these events. So anyway, right now, if you're a buyer and you're making offers, I just want to make sure that you and your agent understand that you are in a tremendously great position to be able to benefit from a massive negotiation. Any agent that's been selling real estate for the past 5 years really has not had to negotiate properly. You kind of have to offer what the seller is wanting or move on. But now you're completely in the driver's seat as a buyer. You've got the opportunity to dictate the terms of how that deal works out, and you can make a much lower offer than you think you can. If you think you want to go, if you're looking at, like, let's say right now, my clients right now are looking at a property that's listed at $829,000. This property, pre-interest rate hikes, would have traded at easily $1 million. Right now, it's listed at $829,000. Where would you start that offer right now? I think some agents are starting those offers a little bit too high. I think where we would want to start that offer right now is somewhere in the low 700s just to start the conversation. So there's the opportunity to start much lower right now and actually engage in a negotiation that really hasn't been a thing for the past 5 or so years. In fact, maybe even longer. So it's very important that a buyer right now is working with an agent that completely understands the landscape and has the experience, either the experience themselves or the experience of the team that's behind them, to help you not overpay for a property right now, because you do have a ton of opportunity to get into great properties at prices that we did not think were going to come down to. So that's one thing right now. And for sellers, like I said, please do not go to market right now. And we're seeing that. We're seeing that. How many times have I said over and over and over again that Toronto is not a city of panic sellers? And we're proving that once again. And if I were to show you on the blog right now, and we can look at the actual data that I've been tracking every single week, like, you'll see that we have 537 active listings. It's been fluctuating around that number for a very long time. Sometimes it comes up a little, sometimes it comes down, but we're about 100 units down from the peak supply level of about almost 3 months ago. So we've been consistently dropping and hovering around this number. But what's the most, I guess, concerning, or what's creating the biggest opportunity for buyers, are these number of sales. Only 32 sales this week, when we should be at around 120, if not more, sales. But if we look at condos right now, they actually pulled back in listings. Almost 55 units came off the market for condos this past week. Condos are showing an unbelievable level of strength right now that we have not seen we've seen it for a while for condos, and if you've been following me, you know that I'm an extreme optimist when it comes to condos. I see their investment value. I see them as an amazing entry-level asset for new first-time buyers to get into. I see them as amazing homes for families as well. I see them as amazing opportunities in Toronto, especially the way the rental market is performing. Condos will always be in demand in Toronto, and you will not be able to present any data or evidence to argue the opposite of that. And it's showing here clearly that we do not have panic sellers. People are taking their properties off the market if they're not getting the numbers that they want, even with these absolutely abysmal sales numbers. Only 59 sales when we're normally around 220 in this time. Like if our sales are down over 70%, naturally you would expect the number of listings to start piling on and piling on. But that is not happening. So if you did not believe the strength of the Toronto real estate market before, hopefully you believe it now when you see these numbers here. And like they do not lie, okay? So like the average days on market right now, 29 days for condos, you might say that's a long time when you compare that to like 3 to 7 days that we were seeing in the uncomfortably heated market of the winter. But it's really not that long in the grand scheme of things when you open your eyes to how people are buying and selling real estate and have been for a long time in other cities and other provinces in the States and in other places around the world. It's not normal for stuff to sell in like 1 to 7 days. And we've been made to believe that that is normal because of the uncomfortable market we've been in for almost a decade now. But that is not normal. So right now, what's not normal are these low sales numbers. So, but once those buyer sentiment starts to improve, once the rate hikes become more predictable and manageable, buyers are going to start coming back to market. Just because rates aren't at 0% anymore doesn't mean that buyers aren't going to come back with the same intensity at 3 or 4% interest rates down the road when things start to come down. When will they come down? Perhaps 2024, perhaps at the end of 2023. I'm not sure, but they are going to come down, and you're foolish to think that they're not. So you should be taking a lot of comfort in these numbers right here with not that many listings adding on, considering how low and how terrible buyer sentiment is right now. So again, a ton of opportunities for those move up sellers and a ton of opportunities for those opportunistic buyers that are perhaps developers that can, take their time over the next 12 months or so to build this property, whatever it is, and then come back to market when things improve. And if things don't improve, you've got that finished high quality product that you can rent out for however long and ride out the down market. So, the one thing that I'm hearing from a lot of inexperienced buyer agents right now is they come to the listing agent and say, hey, let's save the back and forth and just get this done. What's the seller's bottom line? Like that is a common phrase of an inexperienced agent. An experienced agent would just throw in that offer and do the dance, the back and forth to really feel out where that seller is. That's what a negotiation is, and that's what's happening in this market right now. And honestly, it's pretty damn exciting to be in a market like that because we haven't been able to negotiate properly for a really long time. So I'm pretty excited about that. So, you can go through the blog, you can go through the charts on your own. There's, again, these communities are all hovering around the same level of inventory that we've had for a very long time. Sales in the communities outside of the actual core aren't suffering as much as sales in the core right now. So very interesting to see a lot more activity in the periphery right now. And if we're looking at, neighborhoods like Leaside, Davisville, Yonge, and Eglinton, we have still, 6 sales. We don't have a ton of sales in these neighborhoods anyway. We have 54 active listings. That is actually up from 25, which was the absolute lowest amount of inventory that existed in these communities last winter. So even with the doubling of supply there, sales stayed relatively consistent, and the average price is, more importantly, the relation to median price to average price did not move that much, with the exception of some extremely high months back in February when buyers were just going absolutely bonkers trying to get whatever they could get. So, the next big rate announcement is on October the 26th. Projections have worsened since the initial, the initial expectation was that we were going to have 2 more increases this year. Well, we know we're having 2 more increases this year. But the expectation was that we were going to have 2 quarter point increases, meaning 2 25 basis point increases for the rest of the year. So a half point in total. But right now, it seems as though the projection has changed. So a lot of people think that on the heels of the U.S. Fed getting super aggressive and doing a monster raise, the Canadian government will follow suit and do a 50 basis point raise. It's possible that that happens, but again, we don't know what's in the cards. And if that does happen, it's going to affect buyer sentiment a lot more. And like I've been saying for week after week, 2022 is going to close out extremely weak. It is going to be an extremely weak real estate season this winter, no doubt about it, unless there's some sort of dramatic positive news about inflation, and I don't expect that to be the case. The only reason we had some positive inflation news of 2 months ago was because of gas prices coming down, while everything else got more expensive. And raising interest rates has quashed the demand for real estate and some other things. That'll trickle down into more, other luxury items, cottages, other things down the road as well. But it has taken the steam out of the market completely. But raising interest rates is not going to make your milk and your bread and everything else cheaper down the road. It's not going to remove demand for all the things that have gotten more expensive. That's just not going to happen. So interest rates can only help so much. Right now, we just have to rely on time and supply chains improving. The war in Ukraine needs to stop for our grain prices to regulate. We need to have more production in China of the chips, so cars can start rolling out again. So it's not these aren't just ships waiting to be processed so we can get the items off of them. That's not what's really affecting supply. Production is not happening at the level it was happening as well. So although that shipping, distribution is a problem, that's affecting prices for cars, electronics, and all kinds of other things for grains. That's not the only problem. There are more problems that interest rates cannot solve. There are other economic issues happening in these countries far away from North America, far away from Canada, that are affecting prices. So interest rates do not solve those problems, and they won't. But because those things are happening, that's the reason why 2023 should not be, likely not going to be a recovery year. 2023 is going to be a recession year. Things do move a lot faster these days versus in the 80s when we had that 13-year period that it took to recover from the recession at that time. Things are moving a lot faster right now. So we don't really have that 10-year window anymore where we're going to experience like a 10-year down market. But what we do really need to watch is unemployment. Unemployment of high-paying jobs that typically fall in the buyer or seller demographic. Because in early COVID, it wasn't really those jobs that were being lost, so people somehow still believed that it would affect the economy like it didn't. So we'll have to keep an eye on unemployment, more specifically, unemployment rate of people that are typically buyers or sellers. So I'll be watching that in the coming months and weeks and whatever, and we'll talk about that down the road. So anyway, I'm going to keep this a little bit shorter right now. I mean, and I'll just kind of end it with this. Is it possible that for the first time in history, the Canadian government goes against the U.S. Fed and does not do a monster raise, or perhaps decides to halt the rate hike cycle while the U.S., our biggest trading partner to the south, is going super all in on these things? I don't know. It's possible. I kind of learned to not draw these hard conclusions right now. I'm watching, I'm seeing. All I know is that times like this are when you should be building your real estate portfolios. Times like this are when you should be building your investment portfolios. Times like this are when you should be building, when other people are not. Because when the market improves, and make no mistake, it will, you will be in a place to take advantage and reap the benefits of all the risks you took right now. You need to be a buyer right now, but you also need to be leaving some money in the tank because the next year is going to be more expensive for you. You can't day trade real estate, so don't worry if your property is worth less next month than it is this month. But next month, interest rates are going to be higher. So at the very least, if you're not comfortable making a purchase, but you're still thinking about it, I would encourage you to call your mortgage broker and constantly renew your mortgage approvals so you're always guaranteed the lowest rate, protected from those rate increases as they come. Okay, so that's pretty much where I'm going to leave it. Let me quickly scan the blog to see if there's anything that I missed. And I think that's it. So thank you so much. I would love your subscribe. Please, I need to get to 200 subscribers here. I've got this. I need to get to 1,000. I haven't set a timeline for that, but I'm going to give myself 6 months to get to 1,000 subscribers. If you've gotten any value out of what I'm doing here, please share, please comment. It helps me out big time. And please, if you know about this stuff, help me out. Reach out and let me know how I can do better. And what do you want to hear about? I want to hear from you so I can make more relevant content. This November, I'm going to do a video a day for the entire month. So I'm going to need your help with those content ideas. So thank you so much. And if you'll notice, I'm here in the Bahamas, in Eleuthera, actually. This is where my real estate coach moved. And I'm here for a retreat to help me organize my business, to help my team, to help the Spring team build their systems and their processes so we can help you, real estate, a lot more efficiently. So I'm here to absorb a lot of information this week so I can come back and help you. It's just nice to be on a beach. I'm not going to lie. Don't be jealous. I heard Toronto's a little bit cold today. Don't be jealous. Please subscribe. Thank you so much.